Hey everybody, welcome to another geopolitical analysis video. Today we dive into the charts, the markets, see what happened after the initial bloodbath. Now you may be asking, what was the reason for this massive sell-off? And quite honestly, the market makers, and this is a secret that you should always know if you're involved in the markets, that the market makers with the heavy bags, they're the ones that always try to find a certain narrative in order to push down prices further and take out the leveraged longs. This is a phenomenon that occurs in a bull market, and you need to remember that during the bull market, as much as the trend is up and the trend is your friend, you will also get violent pushdowns. And just like the law of opposites says, during a bear market you will have massive inflows of longs moving up and confusing many, thinking that it is a bull market again. So you must always remember to remain first and foremost sanguine and look at the bigger picture. So let's dive into the 4 hour here of Bitcoin, as Bitcoin is one of the most important subjects right now. You can tell over here, for instance, that we've had Tuesday, which I believe that was during the Fed meeting regarding the interest rate cut. This is what happened during the actual meeting, when the market seemed to have been a bit disappointed that they only cut by 25 basis points. We saw initial sell-off, which has continued until today, Friday. But if we look at the bigger picture, these diagonals, especially if they touch, so this is 1, 2, 3, whenever you see highs like these, right, where it's a bit of a higher high, but coming down with a bit of a curve like this, this insinuates that you will see a violent push down. And because diagonals are not a structure that is very foundational, like that is something that you can rely on, it usually tends to exhaust on the third point up. So my point here is that if you look at what's happening, things are in a very predictable manner. These lines of support are very important. As you can see over here, we touched the 92,000. I drew these lines a few days ago actually, and I'm noticing that these lines of support have been touched. Okay, so this is very important. Now, if we lose this support, we can go all the way back down to 80, perhaps 85, and then move much lower into the 73, 77. So you see we have lots of lines of support. It doesn't mean that the bull market is over. I don't think we're going to touch those numbers, but looking at the volume, you can tell over here that the volume has been declining. Okay, yes, we had an increase of volume of sell-off, but also look at the buying volume. Okay, the buying volume is not bad. So that means that there are people who are coming in here with a lot of money supporting this market. Okay, so this bounce here could be meaningful. If we manage to hold at least 50% of this red candle and build off of that, that means that we can see a further continuation to the upside. And now this is sort of a thing that I tend to use. When you look at over here this diagonal structure and it breaks down, you can also expect that this diagonal will break on the upside. So in this area, for instance, and that's when you might see another local top. Okay, I don't believe I could do the fibs, but I've done that in a previous video. The fibs would actually send us to the 124, 28, 130 region. Okay, so if you take percentile percentage wise, let's do 130. You got another 40% in this market based on some of the fibs that are showing us that this has not ended yet. I don't think that the bull market has ended, and I think that we are just shaking out those who are weak hands, those people who are traders, or those who came in for the short ride to make a buck. They're exiting the market, but the long holders are steadily in control of their positions, which are large, and we're seeing that the capital inflows from BlackRock, Fidelity, and others through the ETFs has been consistently large. Okay, governments also are chiming in, Germany, some other European countries, and if the Bitcoin reserve starts, there's also rumors of Dubai, UAE coming in, Saudi Arabia, Russia. This shouldn't scare you. You shouldn't be intimidated by the violent moves. These are shakeouts in order to get those leveraged people out of the play, because exchange markets do not really want to pay 10, 15, 50x of their money to some trader, right? So the odds are against you whenever you use leverage above 2x, 5x. Okay, so this was Bitcoin. Now let's look at the markets. Okay, the markets have been on this huge climb for a very long time, right? It's only normal, okay? It's only normal to see a pullback like that. Like, look, guys, to put things into perspective, 9% in August, okay? After that, in September, you had another 4%. You know, every month you had 3%, so it's expected less than 3% here in November. So you know what, you need to expect that you're gonna have a pullback perhaps at 7%. Okay, if we look at, when was it, April, you had a decent 6% drop. I mean, August was the biggest sell-off, that it was a huge back then, but look where it bounced back. These are very important bounces, and you know, I know a lot of bearish traders who are really good at what they do. They're calling for a top. You should never call for a top. It's very hard, and at the same time, there's no point, especially in a market like this where things are still looking decent. Okay, things are still looking good. The Fed is slowly cutting because it's seeing a strong economy. I don't believe that it is a strong economy, but that's what they're seeing. And the Fed is going to come in here and they're going to buy. Okay, we had a dip from the top of the NASDAQ. This is another, it's 5.7%. You can't tell me that this is a top with a 5.7%. Okay, now unless we start seeing in the next few days that this doubles and we lose a lot of support, like if we lose this support here, if we lose this support over here, if we lose this support over here, this support over here, this support over here, then yeah, you can call for a top. But until that happens, there's no point. There's no point doing that. And I really don't think that all the key indicators that we have here are pointing to a top. Now you may ask yourself, okay, let's look at the dollar. Look at the dollar. The dollar had a massive rise on Wednesday. Wednesday was the FOMC meeting when the Federal Reserve delivered that speech that really scared people here. You know, like, okay, I can understand this. A strong dollar means generally risk off. Okay, it's a flight to safety, and it truly is, especially during a recession. You could see the DXY go to 140. My point here is that the strong moves, the volatility that we have in this seasonality that we're in is normal because there are a lot of things happening. Something that has saved a little bit the market also is that Japan has stopped increasing their interest rates, right? Because that was the massive carry trade of global investors. But I think if we start looking at the actual numbers, this doesn't seem to me as something that is foundational. I don't think that this is gonna stay here. I mean, if we look at the chart here, sure, it has passed. Let's look at the weekly. Okay, sure, it has passed these highs here in the middle, and at some point, if we manage to pass all this resistance, we could see a double top. And then you might see a violent move down. So we have some time yet. I don't know what your timeline is, but I do think that if we are aiming for the top, we should see it in the next 2 months. If not, maybe less. Okay, let me do this move here. 14 bars. So that's 98 days. That's 3 months. But if we do it a little bit less, yeah, 2 months, 2 months and a half. I would give this two months if it's going to do a double top. But it's very important to see, does this form like an M pattern where this can draw lower? We have to wait and see, okay? I'm not here to make predictions. I'm just here to read the charts, and I'm here to see what's going on with the volume. We're looking also at the RSI at the bottom that supports the thesis. Look, here we can make an argument that this is a double top, okay? And there's a double top for the IMW, for the Russell. Yep, November to December. These double tops, though, when you see such a close double top, generally it doesn't always play out. This massive sell-off here could just be something that propels us to much higher highs. It's very possible, okay? And you guys, in a bull market, you have to expect these drawdowns, and these drawdowns are very important because they're like springboards for much higher. So look at over here. Let's put things into perspective again. Over here, okay, you're looking at the cursor here. Look at this drop. This drop was from 200 something to 160 area. This was a massive drop. Okay, guys, this was a massive drop. You don't think there were people calling this the top, or perhaps here the top, or just saying, hey, you know what, this we're going down? Okay, I bet you there were, and this started in July till, yeah, July close to August. But look what happened. Look at this massive springboard. Look, much higher highs, had a smaller dip, and then, you know, 4 5s like the Elliott wave technicals suggest. So look at this. This is just having a moment where new money is entering and leveraged longs are being shaken out. It's very important, very healthy for the market. Okay, one thing that I want to draw your concern and your attention, and something that I think is very pertinent here to discuss, is the interest rates. Now, I showed you some other indicators. We looked at different things on the charts, but this is the most important indicator that should scare you, okay, if you want to be scared. Okay, the moment here, we're looking at the 30-year, the 10-year something, and the 2-year that the Fed follows, most importantly. But I like to look at the 30-year, okay? If we got right now 4.7%, the 10-year is 4.5%, we're above par of the federal fund rates. The federal fund rates are 4.25%, okay? In this situation, what you have to think about is that when interest rates go up, risk assets tend to go down. It's generally a rule here that you will find. Interest rates right now are rising, and this is concerning because if we see this pattern emerge where 4.8 is surpassed and we see a 5% handle, 5.1, 5.2, then that should bring us extreme caution in order to preserve what we have in equities. A lot of people are already holding cash. but this hasn't emerged yet. I think we should wait a little bit in order to decide. But if this continues up, if we see an increase over here, if we see an increase over here of like 10% up, dealing with percentiles here, it's funny, then that's dangerous. That's when I would say, okay, you know what? Expect a massive, what happened here? Expect a massive, don't you just hate this? Like, why am I in this situation right now? Okay, there. Expect a massive sell-off the more we increase. So have your eyes glued here. Have your eyes glued to the DXY. The higher the DXY goes, the lower the risk appetite. And that's why we've seen such a massive sell-off over here in the markets, okay? I'm still quite bullish. I think that we need to squeeze higher. I think it's gonna happen. When it comes to Mara, I'm still very bullish. I love the stock. This is a massive consolidation. I've been trading among this, within this range. I'm sure I'm among the many who trade this because it provides such volatility. It's great. In this situation, am I concerned? Well, let's look. Okay, let's look at the fundamentals here of technical analysis, and that has supported the narrative. We got a massive green wick. You could say this is a continuation of this pole here. Sure, this movement here suggests a change of trend. When you see this over here, I forget the candle's name, but when you see a candle that has equal wick up and down its tail, that means that the change of trend will ensue for the next short while. It doesn't mean this is a top, it just means that this is sort of like the trend that is changing temporarily though. As long as we're within this green bar here, okay, we can assume quite safely, especially if it doesn't close below this wick, that the momentum will continue on the upside rather fast in the next coming little while. There's ample of support here. You see, as it's sitting on this wick here, that's not a coincidence, it's sitting at the base of the green candle. We may see this come a little bit lower. That's reasonable. Okay, it's reasonable. I would be in this situation somebody who would be picking up Mara if you have some cash aside. I think this is a great opportunity to dive into the miners and DCAing. There is a possibility that we hit $16, that we go further down. That's a possibility. Okay, but in the long term of things, in the long scheme of things, like, look at this, guys. Look at this. This is not, these levels are not the top levels, okay? I can assure you that we, at the end of the cycle, should be somewhere over here. 47, 50, maybe 57, okay? This is the range that I would be looking to be selling my Mara position. Okay, so we still could do a 2x here, 3x. I know everybody's looking at these massive red candles and thinking, what the fuck? But guys, you have to put things into perspective. It's close to the end of the season. Massive traders are taking a big break. So now a lot of the light capital is coming in. The professional traders will pick it up after the new year. So you don't have to worry about something right now. You just have to accumulate a little bit and be patient before you draw conclusions. I do think the bull market is intact. I think this is just a drawdown, a very healthy drawdown with a springboard to go much, much higher. And you should actually be thankful, because when prices were over here, those levels some time ago, people were asking for higher and higher, and they were putting in capital. So this is just a retrace. It's healthy to see retraces. This is the name of the game. if you can't afford the volatility, you can't handle the volatility. I'm not saying that I'm completely cool looking at a 12-20% drawdown in Mara is not great when I haven't sold all of my positions, okay? But that's the secret here, that when you see that you're having local tops or you're having movements that are quite strong, you take a little bit of profit, you put it aside, and you wait until a better opportunity comes in. And that these are the opportunities now. These are the opportunities where you want to add that extra profit that you sold when the stock jumped 10, 20, 30%. Okay, especially if you have a conviction for much longer. We still have a lot of room, and this is great. It's still within the structure here. It's still within this diagonal structure here. Okay, it broke down and it bounced. It closed. Yeah, it reached. Yeah, we're in 95,800. This massive red candle in the next few weeks could be nothing. Okay, I still think that we have higher to go, 130, 140, and I think that we're well positioned. Anything else we want to look at? JP Morgan. I mean, like, look at the chart of JP Morgan. Wow, right? But still, we're seeing similarities in a lot of these stocks. We're seeing similar patterns. I mean, obviously the VIX is going to shoot up. And I was considering buying the VIX somewhere over here. Beautiful. Okay, well, you know, guys, I think that this is all for today. If you liked the video, please like, subscribe. Your eyes should be on these interest rates. Look at any decreases of interest rates. Look at the dollar. The dollar doesn't seem to be going up and up and up day after day, so that means that things are somewhat contained. The Federal Reserve might be stepping in here and buying. I do think, though, that if we close over here, this W formation, like we can see, if we close above it, then I think we can go higher, and then we can see a double top. But that will be an ugly period for the markets. So this period might just be ugly for the markets. We might continue to see this for the next few weeks, but then I don't think this is sustainable. It's going to drop. The Federal Reserve will chime in. They will come in with the capital that is needed, and they will actually change the market like they've done before. And you know what? If you're somebody who likes to follow cycles, who likes to follow different events, remember when Donald Trump took office, we saw a huge sell-off, and then we saw the massive rally that continued all these years, especially during after the COVID crash. That's the sell-off I'm talking about. So in this situation, put things into perspective. When Donald Trump first came into office, it was a massive correction, and then the beginning of a huge bull market. And now again, Donald Trump is entering into the office of the White House in the US. We're seeing a big correction before the holidays with higher interest rates. So this is different because risk appetite is decreasing. So we might see this for the next few weeks if the interest rate continues. But at some point, you're going to see another massive melt up. And I do think that we should be right now just nimble, DCA into positions. I'm DCAing into the miners, into a little bit of Bitcoin, etc. Some of those proxies. DCA a little bit, be patient, and at some point we should be able to see the final leg up that I think will take things much higher to the 130, 140 of Bitcoin. If you liked the video, please like and subscribe. Thanks so much for your support, and we'll see you guys at another video. Thank you.